Hello traders, welcome to my YouTube channel. Thank you for being here, thank you for following, thank you for your kind comments below my publications and my posts inside socials and other platforms. I hope somehow you take advantage from my educational content, because the objective of those videos is not to provide you with, it's also to share with you my view inside the market, obviously, but it's not to provide you with a specific entry or a specific target. Let's face what the market is building and printing, and let's try to identify the patterns the market is printing us, so in order to take advantage from them. So this is dollar index. Let's jump into our chart. This is dollar index. This is the only chart that I will talk about today in this video. So this is dollar index in a daily chart, in a daily time frame, sorry. So it's a daily chart, and we are now facing a very similar behavior we were facing at this point, and as we can see very quickly, we are trading potential heads and shoulder formation here, as we can see. So let's go back a few weeks and months back. So 2017, the market has created a top, as most of us are already familiar, and then the market has started to fall from there. We have also an head and shoulder here above the left shoulder, the right shoulder, and then the market has retested the next zone, 200 media average right below, and then the market has synced into the default pattern projection. It will put the price at these lows, and then the market has bottom here, not before another head and shoulder. Actually, the market at this point has created these two bottoms here as a false breakout, and then an extension to the 161.8 extension, printing the shark pattern above. For those who are searching for opportunities to sell the rally, or one last opportunity to sell the rally, let's say, the head formation, the right shoulder, and then actually it has printed the shark and these head and shoulder formation here in a sideways process, and then new lows at the 161.8 extension, again printing another harmonic pattern, the bullish crab pattern. At this point I was sharing that pattern. Actually, I was sharing that possibility from above once the market started to create. In fact, I believe I shared this. I have this chart on TradingView before the reinforcement of the next zone. So at this point I was expecting, okay, eventually it will reinforce this previous structure support. It will build the the heads and shoulder, and from there we can try to take some advantage from it. But it doesn't matter at this point. At this point, we are already trading above these levels, and that's crucial, and that's why I'm showing you all those processes. So this is a reversal behavior. So at this point, we have this bullish momentum and this sideways process, which we expect to trade, in this case, against the most recent price action momentum. So this is a bullish momentum, and we expect with this head and shoulder to violate these lows with this default projection for the pattern. So it's a kind of a trend continuation. It's a reversal behavior that will put the price in the direction of the major trend, but it's a reversal behavior in consideration with the most recent price momentum here. It's a bullish momentum, head and shoulder, bearish trend continuation, major bearish trend continuation. It has stopped below. So we have here the 161.8 extension with this reinforced or supported by this double bottom. So this double bottom, it's also, if validated, it's also a potential reversal behavior. So at this point, As soon as the market prints a resistance above, in this case, because we are facing a double bottom, as soon as the market prints you a resistance above the neck zone, we validate this shape as a potential trend reversal behavior and pattern. So the market is trending bearish on a daily, and we expect a double bottom to change that trend. So the market is trading bearish, we expect a breakout of that momentum. Okay, so we have also the 200 media average approaching from above, and at this point we have two options. One of them is to wait for the price to rally above this neck zone in order to reach higher levels, but and we can try to engage the market. As soon as the market violates this resistance zone, it will turn it into a support. We can try an engagement here. Okay, it will retest the previous structure, the next zone, the support, the previous resistance, it will be now a support. We can try an engagement there. Obviously take in consideration always the structure, and we need to put or to adjust our stops below these lows, so in order to respect the pattern itself. Or as an option, and the one that I prefer, is to wait for the golden ratio pullback, and because the market has already validated this as a potential reversal, so any pullback, it's just like a new station to get new buyers. Okay, as soon as the market validates the double bottom with a broken neck, we just need to wait the pullback. So I like to wait. I prefer to wait for the golden ratio because it will offer me obviously the best risk reward opportunity to trade, or the best opportunity to engage the market with a friendly risk reward. Default projections for this pattern is something projected. It's a very simple projection. It's a projection from, it's a copy, let's say, symmetrical behavior from the previous one, but projected from the 61.8. So this is a projection. We have a structure breakout. You have the bearish candle. It will start the pullback, and we wait for the golden ratio. So let's wait and see what the market has done here. So the market has, as we can see, filled that level, and then it has reinforced a few days later. Okay, and then we will break this level. Okay, it's broken. 200 media average, potential resistance zone, 50% retracement from all these bearish, from this bearish momentum. From all this bearish momentum, it's a 50% retracement. Okay, from this the highs, from this head to the lows, the most recent support, 50% retracement, 200 media average, and the default projection filled also. So we have also the default projection actually being filled at 50% retracement, some type of confluence between FIVs, price action, default projections for the pattern. Okay, it's time to jump out. But note that, and this will put obviously the price trading the 224, eventually 224 to 41. Okay, as we can see here, 127, I'm sorry, and the 141 extension from the first momentum projected above. This is a default level. We will start to, okay, the market will print an ABCD pattern, will retrace, will pull back, and then trend continuation, relief from here. But usually when we are facing the 2618 trade setup, so a double bottom followed by the golden ratio pullback, and if the market violates these highs with a strong momentum, usually we will see the market trading around the 224 extension. Okay, 224 extension, it will break this 200 media average, as we can see, and it will find a resistance, let's say between the 241 and the 261 extension as an extreme extension above. Okay, so As we can see, 241 has found some price resistance. 261 extension, huge resistance there, strong price behavior here the same way, and we are now moving sideways inside that range, building one potential left shoulder here, a new high, forming the head, and now we are the right eventual right shoulder here, respecting this structure, and we are now facing support again. As we can see, the market has already reacted from here. Actually, let's jump. Okay, the market has reacted here with this bullish candle, and it has started to bounce and to. In a lower time frame, we need to go into a lower time frame to understand what the market is printing here. But again, we are now facing the eventual support zone, and we have targets for this alt bat pattern printed at 113 extension. By default, we will search for something like the 38% retracement here from these structure highs. Obviously, we need to adjust our Fibonacci to the new highs. So this is the Fibonacci level we expect, at least for that pattern, the default target. So, and it's also the 161.8 extension, the formation for the completion point for another harmonic pattern, the crab pattern. It's a small in a lower degree advanced pattern. So guys, for those who are following me, thank you for being here. This is my forecast for a long, let's say a short or a medium term, because it can take a few days and 1 week eventually to reach those levels or not. That depends the strength of the momentum. But let's say we will face this zone, this support zone, this next zone for the next 1, 2, or 3 sessions. We never know, but let's imagine something like that. It can take some time to reach those levels. So this is my default target for the harmonic pattern. Note that a default projection for the heads and shoulder will put the price below, and we need to try. Okay, we'll put the price something close, very close to the golden ratio, the default heads and shoulder projection. So I hope you enjoyed the video. Thank you for being here. Stay focused in the process, and have a nice trading week, people. Stay fine.